Welcome back. The UAE's financial markets are closed today. Trading will resume on Sunday. So now let's take a look at the various currencies, followed by the price of oil and commodities. In our top business story, analysts say that markets are likely to remain unimpressed following the amendments made by the Italian government to its austerity package. The plan was agreed after heavy pressure from European Central Bank, but the government has since dropped parts of the package, including a proposed levy on high earners, and also promised to ease funding cuts to local governments. Analysts have said the uncertainty surrounding the package means that markets would continue to remain suspicious of Rome's ability to control public finances.
I don't think it'll calm anyone. If anything, I think it will probably cause more confusion. I don't think markets will be very pleased to see these constant changes, constant negotiations. What they produced last night was obviously the result of a political compromise. And we've seen the solidarity tax removed, and we've seen the cuts to local government authorities watered down quite a lot, and replaced by fairly unspecified measures on combating tax evasion. And analysts are always a little bit sceptical about that unless they are very specific, because the revenues from measures against tax evasion are notoriously uncertain.
And staying in Europe, German Chancellor Angela Merkel said on Tuesday that all Euro countries must carry out their own reforms and praised Spain's debt-limiting steps. Merkel added that they are convinced that the problem needs to be solved at the source and that there must be a stronger harmonisation in the EU policies, pointing out that Germany and France have agreed upon a joint tax system for businesses. Merkel praised the debt-limiting steps of Spain has undertaken and the dedication it has shown towards achieving them. And over in the US, the Federal Reserve decided to reveal plans to keep interest rates near zero until 2013. But there were some members who wanted more action in order to help the economy get going again. According to sources from the Fed's August meeting, worries about a weakening labour market, slower consumer spending and an elusive upturn in the housing market prompted some policymakers to call for more quantitative easing. The Fed, however, chose to hint at the possibility of further easing down the road in its official statement. The group, though, was not unanimous, setting up the stage for hearty discussions at a September meeting, now scheduled for 2 days instead of one.
I worry that home prices are going to fall, it doesn't. It looks like we're not going to be aggressive in taking care of this problem, and we might even double dip. We're sort of in a growth recession already, but we might double dip into a real recession.
Gold prices have been hitting successive records for several months now, and at Japan's largest bullion house, 1 gram of gold was worth 4,745 yen, the equivalent to $62 US on August the 23rd, the highest value since September 1980. In August, prices were up 14% as investors flocked to the safe haven precious metal. Japanese households held about 1,500 tons of gold last year, much of it bought over 30 years when gold prices had languished. The combination has lured many to seek to profit from the bullish gold market and sort through anything they may be able to cash in with. The craze has helped make Japan set to become a net exporter of gold for 6 years in a row. In 2010, Japan had a record net export of 78 tons of gold. And up next, we have the day's sports news, so stay with us.